zigzag pattern versus Fibonacci extensions. Zigzag pattern versus Fibonacci extension. We are on a monthly chart of Range Resources Corporation. The epic is RRC, Romeo Charlie, and we want to discuss zigzag pattern versus Fibonacci extensions. Let's get started. All right. When we are talking about Fibonacci extension, we are talking about Fibonacci traders that rely on Fibonacci retracement and also on Fibonacci extensions. And the first group of market participants that are using the Fibonacci extensions are Fibonacci traders. Unfortunately, most of the Fibonacci traders do not know about other trading tools that other market participants are using. So, for instance, Fibonacci traders don't know, not all Fibonacci traders know about the Elliott wave pattern, for instance, the zigzag pattern, the flat correction pattern, all right, and other Elliott wave pattern. So as traders, Fibonacci traders are using a Fibonacci extension, sometimes they get into trouble because they do not know the zigzag pattern or any other, Elliott wave pattern, or they do not pay attention to other trading tool. It is, it's a shameful situation that when one is a market participant, one does not want to know about other market participants, all right? So if you are a day trader, you want to have a bit of idea how swing traders are trading. And also if you are a swing trader, it is very important to know what the position traders are, how the position traders are trading, all right? If you are also an ordinary trader, it is also important to know how the big financial institutions are trading, all right? If you are a day trader, you want to know how the high frequency traders are trading, how the scalpers are trading. Today, I want to highlight a few points that will help those who consider themselves as the purest Fibonacci extension traders. There are other tools that are used in the financial market, all right? So if you are using a Fibonacci extension, it is wise to know, about the zigzag pattern or the Elliott wave pattern or other technical trading tools that are out there, It took me some time to understand this because when I started trading first, I was using a stochastic MACD, all right? And then slowly but gradually, I have discovered that there are other market participants that are trading in a different way, all right? For instance, I recognize that there are traders that are using Elliott wave, traders that are using a Fibonacci, traders that are using a fractal pattern. All right, and there are different type of market participants. All right, there are also there are also long-term investors, and they do not trade like day traders or swing traders or position traders. All right, so today I want to highlight why it's so important for a Fibonacci extension trader to know a little bit about the zigzag pattern. All right, according to the Elliott wave theory, the zigzag pattern has the shape of a zigzag. So if you know a zigzag, this is something like this. Price goes down, price goes up a bit, and then come down, and we have the shape and the form of a zigzag. All right. Now, if you go a little bit deeper, because I don't want to make this video a zigzag pattern video, because it's about Fibonacci extension trading, all right? So, in the language of the Elliott wave traders, all right, in the mind of Elliott wave practitioner, the zigzag pattern is subdivided into three components. The first part that we call A, the second part that we call B, and the third part that we call C. The first part that we call A for alpha is subdivided into 5 minor waves. Here it is, 1, 2, 3, 4, 5. The B part of the zigzag pattern is subdivided into 3 waves, 1, 2, 3. All right, and the C part of the zigzag pattern is formed of 5 manual way, 1, 2, 3, 4, 5. All right, so when a Fibonacci extension trader see a zigzag pattern, he or she is not even aware of the zigzag pattern. He does not know what is a zigzag pattern. He does not know that it is a correction. Why this is so important? When we are using the Fibonacci extension, the best time, repeat, the best time to use Fibonacci extensions is during a trending phase. Now, probably you didn't hear what I said. Please allow me to say this again. The best time to use Fibonacci extensions is during the trending phase, not during a correction. All right, what do I mean by correction? So you can see here. So I'm talking to traders like this to wake you up a bit. So you may start looking at other tools that other market participants are using in the financial market. Why is so important? Because other market participants can make you lose. So if you have a small, you have only a small section, you are using only one specific technical tool, and you don't want to know anything at all about other market participants, you can get into trouble. All right? So what do you mean by trending phase? During the trending phase, the price will be either in a rising channel, or a declining channel. So as you can see on my chart, this is a trending phase. All right? Okay, this is a trending phase. So if I remove my from here, in fact from here up to this point, that's what we call a trending phase. What is happening here? You see the price move, price went down, went up, pulled back, went all the way here, and it come back down 1, 2, 3. This is a correction. Now, so if you understand what is a trending phase and what is a correction as a Fibonacci trader, you will avoid a lot of Fibonacci extension trading mistakes. So the best time to use Fibonacci extensions is during the trending phase. So price is trending in a rising channel and then in pullback. All right, this is the best time to use Fibonacci extension. Okay, it's the best time. Now, what we have seen, because a lot of Fibonacci traders don't want to know about the Elliott wave or what is a correction, they get into trouble. So for instance, you see here, a correction has begun because I use Elliott wave. See here, this is a correction that has begun here for this stock. So this stock was trending, we can say, from 2001 up to 2008. And then a correction was in place up to this point here. All right, this is a correction. So a lot of Fibonacci traders will start using Fibonacci here. So you see here, the price went down. Here it is. Pay attention. So price went down from here to here, yes or no? And then it rallied up a bit up to this point. All right. So suppose you are just a Fibonacci extension trader. So you will use your Fibonacci extension. You say, so price went down from here to here. You want to know how much retracement is that? And you say, all right, George. Okay, hold on, please. And you say, George, how much retracement is that? Okay, let's find out. And then you apply your Fibonacci retracement. And you say, oh, okay, George, this is what? Okay, 61.8%, or let's call it, 61.8% Fibonacci retracement, all right? So you set your target at 161.8% Fibonacci extension level or 138.2% Fibonacci extension level, because if there is a retracement of 28, there is if there is a retracement of 61.8, the target, is 138.2% Fibonacci extension level. Yes or no? That's what a lot of Fibonacci extension traders will do. Okay. Now, but you look what the price has done. After this pullback to 61.8%, the price, look, it just came back down a bit. Didn't go back below this low. You see, because it is a correction. It is a correction. What is happening here? All right, the price came down. Look at it. It went down 1, 2, 3. All right, it went down 1, 2, 3. It's a correction. And then it went down, and then it went up again. Why this is a correction? I will show you now. Hold on a second. I will show you now. Let's see. So I'm going to apply Fibonacci extension to the trending phase. Fibonacci extension to the trending phase. All right. Area way traders know that the price has a high chance to find a resistance at 138.2% Fibonacci extension level of the trending phase, because they understand that this is a correction. 1, 2, 3, and then it went up again. 1, 2, 3. It is a correction. Remember what I said to you. The takeaway in this tutorial today is that the best time to use Fibonacci extension is during the trending phase, not during a correction. But after that, you can see that the price came down again. 1, yes or no? 2, okay. 3. This is a zigzag pattern. This move here, 1, 2, 3. This is a zigzag pattern. As I explained to you here, you see the price will trend. Now you see 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. It's a zigzag. 1, A, B, C. The 3 components of the zigzag pattern. Now that the price reached the 138.2% Fibonacci extension level of this trending phase, now it's coming down 1, 2, 3. The point I want to make is this. Let me remove some line on my chart and focus only on the zigzag pattern. I'm trying to encourage Fibonacci traders to combine the area way principle with the Fibonacci extension so they may avoid critical Fibonacci extension trading mistakes. So here it is, you see now. So a zigzag pattern is being formed here. So what is happening again, you can see here, if you are just a Fibonacci extension trader, all right, and you are only using Fibonacci extension, and you do not know anything about a zigzag pattern or area wave pattern, and you are here. So price went down from here to here, and then rally up. So what you will do as just a Fibonacci trader, you will try to find out how much retracement is this pullback, where it is. It's a 50% Fibonacci retracement level, this one here. It's a 50% Fibonacci retracement level, or this move down, okay? And then you will use the Fibonacci extensions, all right? And you will set your target at 150 Fibonacci extension level. In this case, the price did stop at 150 Fibonacci extension level, which is good for Fibonacci traders. But sometimes you may not see that. The price may not stop at 150. The price may continue to 161.8% or more. But if, for instance, you understand area wave, you can also look at the internal waves of this price action. And this will give you a bit of idea where, okay, the target should be. So you look this move here, you see it came down like this, and then rally up, it's going down. You'll check the internal wave here. So if you go, for instance, to the daily chart, you see first 1, 2, 3, 4, 5. Once you see that, you know that that's the end of the extension. The point I want to make in this video is that if one is using Fibonacci extension during the corrective phase, when one is applying Fibonacci extension to corrective patterns, it is a mistake. One can get into trouble because corrections are not trending phase, and we shouldn't expect an extension. All right? So, it is not recommendable to use Fibonacci extensions during the corrective phase. The best time to use Fibonacci extensions is during the trending phase, when the price is trending either in a rising channel or in a declining channel. So you may say to me, George, well, this is in a declining channel, yes or no? yes, this is in a declining channel, but this is not a trending phase. It is a correction. That is what is. So anytime we talk about correction, this is what I said to earlier wave traders. We want to ask, what is the corrective wave is correcting? You see this move now from this level here, 1, 2, 3. It stopped exactly at which level? Let me remove some line on my channel. I want to explain something to you. You see the trending first from here to here? Yes or no? You agree? That's the trending first. And I explained to you that all this blah, 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 all the way here, it's a correction. So generally, all right, after a trending first, where is the correction will end? Where does the correction very often will bring the price? So there are levels, all right, that the investors and the area wave traders are watching. So the first zone that they are watching during the corrective phase, so we have a trending phase from here to here. The first zone that they are watching is between the 50% and the 61.8% Fibonacci retracement level of the trending phase. So you see here, so if you were here, you see here how it came down like this and rally up to 61.8%, and you were applying the Fibonacci extension, expecting the price to go down more. But we know that after a trending phase, the correction can end in a zone of 50% and 61.8%. This is one of the reasons why this price formed a double bottom chart pattern in that zone. The first line here is the 50% Fibonacci retracement level. The second line here is 61.8% Fibonacci retracement level. And there was a trending phase, a correction has begun, and other traders knew that a correction very often will end either in a zone of 50% and 61.8% level, or which level? So apart from the 61.8 and 50% Fibonacci retracement level, which are highlighted with these two lines, let's color them into pink. All right. Pay attention to the pink line. That's between the 50% and the 61.8% Fibonacci, okay, retracement of the trend. So here you can see that the price came down and rallied up a bit. It is a mistake to apply Fibonacci extension during the correction. See here the price did stop in that zone. Then we have another pattern that's been developing, bringing the price to 138.2% Fibonacci extension level. Now, you are learning Fibonacci, but you don't want to know about area wave. But there are patterns, area wave pattern, that align with Fibonacci extensions. Wouldn't it be nice to know or to learn to master the area wave? Wouldn't it be nice to learn to combine the area wave and the Fibonacci? So the next zone where the price after the next level where a correction very often will end, there are three levels, okay? So first zone between the 50% and the 61.8%. There's another level here. Is the zone of 78% Fibonacci retracement level of the trending phase. That's where the zigzag has ended. So when you see that this formula, you see how it went up all the way here from a higher high. It's a correction, in fact. But now it's coming down 1, 2, 3. So you will draw the 50% and the 61.8 zone. You will be monitoring that level. See here, if you apply Fibonacci extension, you don't want to apply Fibonacci extension in this case because it's a correction. So you instead pay attention, you sell it here, you're paying attention to this zone. You may bank your profit here. If you break below a further resistance, well, the next level is 78% Fibonacci extension level. Some correction will cancel the trend, bringing it to the third level, which is the 100% Fibonacci retracement level. So the point I want to make to you, you are using Fibonacci extension. You have learned to use Fibonacci extension for some time. I want to highlight just one point. Do not, okay, it is not, okay, in fact, it is not recommendable to use Fibonacci extension during the corrective phase. It is not recommendable to use Fibonacci extension, okay, to apply Fibonacci extension when a zigzag pattern is being formed, all right? So it is better to highlight the 50% and the 61.8% of the trending phase, and also the next level, which is 78% Fibonacci retracement level of the trending phase, and 100% Fibonacci retracement level of the trending phase. Instead of using Fibonacci extension during the corrective phase, It is better to pay attention to those levels that I'm talking about, be the zone between the 50% and 61.8%, the 78%, and the 100% Fibonacci extension level. It is not recommendable to use Fibonacci extension when a zigzag pattern is being formed. But if you want to use Fibonacci extension for a zigzag pattern, if you want to use it, all right, let me show you what you need to do. Use a conservative Fibonacci extension, the 150 Fibonacci extension level. What do I mean? So a zigzag pattern is being formed and you are Fibonacci trader, all right? You don't want to know anything about area wave, but now I explain to you what is a zigzag pattern. It's in the shape of a zigzag pattern, and usually formed after a trending file. It's a corrective wave, all right? But you don't know anything about zigzag. But if suppose you are here and you want to apply Fibonacci extension to a zigzag pattern, all right? What I will say to you is this. If you apply Fibonacci extension to a zigzag pattern that is developing, be ready to take your profit at 150 Fibonacci extension level. Here it is here. That's the 150 Fibonacci extension of this move, of the first part of the zigzag pattern. That's all. That's all. If you want to insist to apply Fibonacci extension to a zigzag pattern, which is a corrective wave, and you applying it, set maximum target at 150 Fibonacci extension level. Be ready to secure your gain when the price reaches the 138.2% Fibonacci extension level, because it's a critical level. The 138.2% Fibonacci extension level is a critical, a key level. If you have any question or suggestion, put in the comment section, and in due course, I will be busy recording another video to clarify your question. We are the GSTW24 traders talking about zigzag pattern versus Fibonacci extensions. Happy trading to you all, and speak to you soon.